Welcome to the Traders Clinic, your regular shot in the arm of trader insights, philosophy and knowledge, brought to you by two money managers, Ali Crooks and Charlie Burton.
In each episode, we answer your burning trading questions and cover all things from the world of trading.
We do indeed.
We're back.
We are indeed. What have we got this?
Right, we're going in with trader tales. So the idea here is, what is your best trading story, or at least a story that you think the listeners will really like to hear?
I think this. Okay, I'll go first. We'd already agreed. We've both got a story to share here. This one goes back decades. This goes back actually to the 1970s, early 80s. This is like the original high frequency trading story. So high frequency trading just a decade ago became, the buzzword because some of these big firms, hedge funds were, getting down the pipe. As they saw orders coming down the pipe, they would be so close to the exchange that they'd get their orders in first, and and all that stuff that was going on, and getting ahead of the big institutions who might be trying to buy 1 million shares of something, and hedge funds would see that order coming down the pipe, so to speak, and their systems would get in and jump the queue. So that's what this is essentially about. But this is about an individual who was just 18 years old back in whenever it was, late 70s, let's say. Now in America, because he's from the States, back then, investment newsletters were massive, were huge. It was really the heyday. In the 70s and 80s was the heyday of the investment newsletter business. And don't get me wrong, it's still massive business to this day, obviously on email and stuff with these big publishing houses. But it was the same back then. And so what happened then is that you used to receive a physical letter in the post. Yes, I know that there was such things as receiving a letter in the post. And usually it would give the thoughts of the investment guru. It would usually write, it'd be like a few pages, his general thoughts on whatever, the economy or whatever. And then usually at the end, there'd be 3 or 4 stock tips. Now, these stock tips would normally be sort of low volume shares, because back in those days, it wasn't a regulated industry, and the investment newsletter publisher and the guru would recommend shares, but they're already in. And then, of course, as their newsletter, if they got a big database of customers, back then, your average typical customer with dentists, doctors, wealthy individuals used to subscribe to this stuff, and then phone up their stockbroker. Oh, right, I want to buy, this share and this share and this share. And just because they were low volume shares, the sheer volume of people buying them would send the share price up. And sometimes the share price would continue going higher. But a lot of the time, it would just then fizzle out, and a week or two later, it's gone back down again. In the meantime, a lot of the investment gurus they've bought beforehand, and then they've sold once they've seen the price go up. Done.
The original pump and dump. There we go.
Absolutely.
Yeah.
But this individual, very, very intelligent, worked out a system. So as an investor, as a subscriber to one of these newsletters, what he realized was exactly that. He would buy his investment newsletter would arrive by the post, and he lived in like Ohio or somewhere in the middle of nowhere. And he noticed this pattern quite quick, and he was only young, and that about 2 or 3 days after he'd bought his shares, that he would see this big jump up in price, which sometimes wouldn't last much more than a couple of days or so, 2 or 3 days. And other times it might carry on going higher if the share was a good stock, and it would carry on going. But a lot of the time he noticed this initial surge, and he thought, what's the point in me holding on? I'm just going to hold it for like 2 days and then out, let's say, something like that. That was the story. And so what he'd indirectly realized was it was the US postal system that was to his advantage, because the publishing houses were usually in the big cities, and the biggest the wealthy customers were all in the big metropolitan areas. They're in Chicago and New York State and all of that. It's where all the doctors and the big concentrations of wealthy people were, and probably down in California as well. But it just so happened that his little town in the middle of Ohio was one of the first places to receive the letter.
Yeah.
And so He was getting the letter first. 2 days later or so, the big metropolitan areas were receiving theirs. So they're then phoning up their stockbroker, and that was what was sending the share prices up just 2 to 3 days after he's already got in. So now this guy became a millionaire back in by the early 80s by doing this. Because what he did is he figured this out and he said, this is why this is happening. He looked it up because you could find out this data to see where letters were being sent from and the places that were receiving them first across the US. So he looked at all the investment newsletter houses at that time, the good ones, the prominent ones, not the dodgy ones, and then would open up PO boxes in towns across the US where he knew, by examining how the postal routes worked, where he knew they were going to get those newsletters were going to be arriving first. And then he would just pay, a young lad in that town, whatever, to literally phone him up and read out the stock tips. And that's what he did. Don't know how he got people to do it in these towns, whether they're friends and they went over, I don't know. But he made for its time, he made a small fortune because he was getting in early on all these stock tips, selling 2 days later out, pays the lads who were getting the mail for him, whatever he was paying. And the story continues. So he made a small fortune just by doing that. Now that is clever because no one else had thought that. He was the original HFT. And he ended up opening a brokerage. So he ended up in the 1980s opening a brokerage, and he held that way into the late 90s, I think, before he sold out. So he made millions from that. But he did trade the futures markets as well himself. So he had a brokerage, but he had a brain for the market. So he had one of these you mentioned on a previous episode, like a Rain Man type brain. He wouldn't look at charts, doesn't look at fundamentals, and he still is alive and trading to this day. And he's in his 70s or so now, worth a small fortune. And he just sits there reading the tape. That's all he does, just reads time and sales. And he'll just be on the phone to his broker, even to this day. Well, I say to this day, I heard this story 5 years or so ago. But, and literally he'll be on the phone on an open phone call for hours. And it's worth the brokers to have someone sat on the phone just waiting to say, buy, sell, buy, and he's trading S&P futures all day long. And as he's watching the tape, and and he's still apparently a phenomenal trader because he just sees levels within the time and sales. Love that. And that's that. But what an original story that he took that information and how he figured out the postal system. So it wasn't a guarantee because some of those stocks but because a lot of them were very, very low volume stocks, if you've got a load of dentists, doctors and wealthy individuals buying, even if they didn't last for more than 2 days, the majority of the time, it was as good as close to a guarantee of him making money as it could have been. And like I said, he was already a millionaire by the time he was in his 20s, opened up a brokerage, and then traded right away certainly into his 70s. What a story.
Well, I think what's nice is it's very entrepreneurial, isn't it? It's someone might say, he was obviously a little bit lucky initially, bearing his mind, but he really exploited that luck, which I think is what's so great about that. Yeah. And being able to think laterally and be able to work that out. It's something I wouldn't be able to do, but it's just, I think it's wonderful. Really good story. Well, that's very positive, and mine's got a nice ending, but it's a little bit more, I think it's a reflection of a mindset that can grip a trader, and how in the moment your thinking can be very very all over the place. So this is a story about a trader. It's a little bit more recent, but he got involved. I can't remember the instrument, but it doesn't matter because it's the story is about what he did. So he got in early on a move, and he continually bought into that move. Now, I don't know if he was a little bit over leveraged or what, but the point is he was getting in as this market was going up, piling in, and his profit was going up and up and up. And he went from, I think, an initial investment of around 30, and he got it up to $1 million. So he's sitting there and he's turned 30 into $1 million. Now, obviously, that profit's not banked at that point. But what's interesting is I don't think he will have had a strategy, because he was in that position where he's just seeing this money go up. Now, the long and short of it, and you can probably realize where this is going. The market continued to go up, continued to go up, continued to go up, continued to go up. And at one point, he was sitting on 4 million profit. So you think about this for a second.
This is pounds, by the way, ladies and gentlemen. Yeah, it's not rupees.
Yeah. Yeah, or Zimbabwean dollars. Yeah. He's there. He's taken a 30,000 investment, rightly or wrongly, whether he went in with too much leverage. He's sat on 4 million. Now, this is back in the day where the broker was allowed to ring clients up and essentially give them advice or subtly suggest what they should do. Obviously, that can't happen anymore. So the broker in question had rung him up and literally said, maybe you want to take maybe $1 million off the table, buy yourself a house. And what I haven't told you is this guy was quite young. So he's in a situation where this is serious. This is lottery, life-changing amount of money. And he's
20 odd years ago.
20 odd years ago. This is a huge amount of money, probably nearer the 10 million mark now.
Yep.
And you probably know where this story is going, despite what the broker said, probably what his friends said.
They were pleading with him.
Yes, yeah. And for a broker to do that. So he's rode this market out. He's been through all of that. I'm sure there were ups and downs during that process as well. Maybe even, it might have been short term, but he's probably seen the profit go up and down. He's sat at 4 million. This is a one-time event in your life. It's a black swan event for the positive.
Yep.
And you know where it's going. Yeah, it came down and down. He didn't sell. He didn't take any profit off the table. Lower and lower and lower. And he finally exited the position with about £20,000 worth of profit.
Now, you and I would say that's a bit painful. I mean, I'm quite used to seeing trades reverse, but that's quite a bit. That's significant. And so, what happened?
Well, he decided with that 20,000 that he'd take his mates on holiday. So that was how that's how the story ended.
Yeah.
So at least his mates had a good trip out of it.
I mean, sorry, go on.
I was just going to say it's that's a story that is actually reflected over and over again in different ways in the market. People holding a position, thinking it's going to go on forever. We've probably got this. There's probably tons of people listening that know somebody in crypto that's done something similar. I know a guy that had 10,000 turned it into 80 and then lost the lot.
Yep.
And it's this mindset. It reminds me of the story you told me years ago about Chris Evans when he was involved with Virgin Radio and his stock going up and then seeing it roll over. Is it what is going on in that trader's mind when they're sitting on 4 million? Logically, they know that anyone listening to that would be screaming, going, "You've got 4 million potential profit from a 30,000 investment. Get out."
Yeah.
But in that moment, a lot of people, what are they thinking? Well, if it's got this far, it could keep going.
Well, exactly. Otherwise, he might as well come. He could have, in the same way, he could have come out 500,000. Yeah. And and we could be sitting here telling this, this guy turned 30 into 500,000, and then it rolled all the way over. It actually, and it didn't go. It went beyond 1 million. 4. Who's to say it couldn't have gone to 14? But at the end of the day, the broker was right in that when you've had that big a run, I don't know what the percentage gain is, what it is, but that big a run and you still not taking anything off, like they said, just like you said, it'd been good. Just take $1 million off. Yeah. Go and buy a house. Go and put it in something else.
Set yourself up.
You can still hold on. So.
But I think it's interesting.
I think the thing. Sorry, I'll just quickly say this. There's one thing holding on to a position if you've got a trade plan. If you've got a plan that you say no, the analysis, Look, he wasn't a trader. He got into the markets because of, for whatever reason, he wanted to buy some shares in whatever, and he didn't have a plan. If you've got a plan and it just so happens your plan is going to be, well, no, I'm still holding out. This was the plan right from day one. Then I don't think there's anything wrong with that, but he didn't have a plan.
No, and that's the thing. And when I've told this story before, people say, well, I would have got out 1 million or I would have got out here. Well, you don't know that unless that was like you said, exactly that, unless that was your plan on that trade. So the thing that meant that he didn't get out at 500 and didn't get out at 1 million and didn't get out at 2 million is the reason why he didn't get out at 4, because he never had a plan and he thought it was going to go up forever. And it's only when that realization of, oh my God, I've given it all back or almost all of it back, it's not going back up.
Yeah, and there are people, I know we're only going to share one, but it's made me think of another one, which is a nicer story, exactly this, very, very similar. And there's a lot of people who have done this sort of thing, bought an individual share. I've heard stories about people bought gold in the early 2000s, had massive runs. But this one was a postman, and similar sort of thing, wasn't a trader, but he did have a plan. His son, he noticed his son was into a certain brand. It was Adidas or whatever it was. So he and his son and their friends and all the kids seemed to, I don't know how long ago this was, but so he decided, I'm going to open up an account and put some money into it, and I'm just going to trade it up and see. And so he did the same sort of thing. The shares started going up, and so as they went up, he bought more and bought more and used the leverage to buy more. And he turned that initial capital into, I think it was close to £1 million, but he got out. He had a plan. And he said, I am going to get out when those shares go to X, Y, and Z. And it just so happened it was close to £1 million. And even better, because he wasn't a trader, he was a postman. He knew that he'd had a good run. He took the money and he closed his trading account as well. And they never saw him again.
Love that.
And he just said, that's it, I'm set for life. And, on his postman's salary or whatever, that's life-changing money to anyone. And I love that story because he was someone who did have a plan.
Love it. So, great stories. We're going to move on to a question we've had in. Does trading ever become easy?
No. There you go, that's the answer.
I was going to say, we're done. I think what I like about that question is I'm making an assumption here, but the fact that the question's being asked means that person is probably finding trading very, very difficult because they're in a position where they're sitting there and they're hoping for that ease. And we've talked on other episodes about this want and desire for people for trading to become easy, the high win rates and all these things that we've talked about that people want from trading so it feels easier. My answer is as blunt as yours. No, it doesn't. But I think as a trader, it's really important to think and accept that it's not going to become easy. It can become easier, but there will be challenges that you will face as you grow your account, for example. If you take your account from 10,000 to 20,000, or you add more money into your account, or in 5 years' time you're trading a bigger pot, or it's like we've done, chosen to manage money. So there will be challenges along the way. There will be drawdown periods. There will be all sorts of these things happening. So I think a better question or a better framework, mental framework to have is an acceptance that trading isn't easy, and that's the point. That's part of the fun, is the challenge.
Yeah. I think as you become more experienced, it should be, and not everyone who becomes more experienced finds it easier because they don't spend time on their mindset. But as you become more experienced, then certainly if you invest in your the mental side of things, then it becomes easier. Dealing with the knockbacks, dealing with drawdowns, because every single professional trader I've ever met still has drawdowns. They still have drawdown periods, flat periods where the market is. If you were a newer trader, that would be massively challenging you. If you've not made any money for however long and your account's going sideways or your account's dribbling down in a drawdown. A newer trader will really struggle with that. Now, an experienced trader is still going to go through those same things. Just because you're more experienced doesn't mean to say that you're not going to have these. You just deal with them better. And so in answer to the crudeness of the question is, does trading ever become easy? No, it doesn't, because just when you think it is, doesn't matter how long you've been trading, there will be the next challenge. It might just be that you're out of sync with the markets for a period of time. And you and I have both had that, 10, 20 years into our trading. There's going to be periods where you just feel out of sync with the market. So no, it's not easy. The difference is you just deal with it that bit better than someone who's only been trading a couple of years. But you're only going to deal with it better if you do the mindset work.
Exactly. And on that note, his name's Charlie Burton.
And his name's Ali Crooks. Trade safely out there.